Welcome to Simply Explained Academy. Can you imagine owning just a tiny piece of a massive skyscraper, a priceless painting, or even a government bond, all right from your phone? That's exactly what real-world assets tokenization is making possible. It's this incredible handshake, a powerful blend of the traditional financial world we know and the cutting-edge innovation of blockchain technology. At its heart, real-world assets tokenization is about taking tangible things, like a building, or even something intangible like a bond, and turning their ownership into digital tokens on a blockchain. Think of it like creating a super secure digital twin for something real. Traditionally, proving you own something big involves lots of paper and slow processes. But by putting that ownership onto a blockchain as a digital token, it becomes something you can program, access globally, and verify instantly without needing a central authority. This isn't just scanning a document. It's a whole new form of digital ownership, backed by solid legal stuff. It's a fundamental shift that could literally change how we own things worldwide. So, in this video, we're going to break down what real-world assets actually are, why this technology is such a huge game changer, how it actually works, its incredible benefits. We'll honestly talk about the challenges, and finally, we'll look at the super exciting future that's coming. Stick around, because this is going to be big. Alright, let's start with the basics. What exactly are real-world assets? Simply put, they're anything of value that exists outside the blockchain, stuff that didn't start digitally. Now, the interesting part is what happens when we take these real-world assets and bring them onto the blockchain. That's called real-world assets tokenization. It's a super flexible process that can apply to lots of different kinds of assets. Let's break it down. First up, real estate. We're talking land, apartments, even commercial buildings. There are already companies out there letting you own just a tiny slice of a property. So instead of buying a whole apartment, maybe you own 1% and still earn part of the rent. Kinda wild, right? Then we've got commodities. Think gold, oil, raw materials. Normally, trading that stuff is a mess, but with tokenization, it's way easier to do it digitally. Next, financial instruments. This one's big. We're talking US Treasury bonds, corporate shares, even invoices. These are being wrapped into tokens and traded just like crypto. And check this out, luxury goods and collectibles, like rare cars, fine wine, and yes, even high-end art. Imagine saying, hey, I own a tiny piece of a Picasso. That's possible now. And finally, intangible assets. Things like patents, copyrights, music royalties, carbon credits. These are perfect for the blockchain because they don't physically exist. They're already digital in a way. A lot of these assets are what we call illiquid. That just means they're hard to buy or sell quickly. Tokenization isn't only about making the buying and selling process faster. It's actually about creating new ways to trade things that were really difficult to trade before. This could open up investment and ownership to way more people than ever before. So now that we know what real-world assets are, let's talk about why real-world assets tokenization is such a game changer. For a long time, the crypto world was kind of its own island, but real-world assets tokenization fundamentally changed this. They bring tangible, real-world economic value directly into the blockchain world. This means crypto isn't just about digital assets anymore, it's about building a direct, verifiable connection to the global economy. Bringing real-world assets into DeFi makes it much stronger. Using things like tokenized real estate or bonds as stable backup means DeFi doesn't have to rely only on risky crypto. This stability helps attract big investors and regular people, making DeFi more trustworthy and a bigger part of global finance. It's like DeFi is growing up. Think of real-world assets tokenization as the ultimate translator at a high-stakes negotiation. Traditional finance speaks one language, and crypto speaks another. For years, they struggled. But tokenized assets are changing this by providing a common language and a bridge that allows these two powerful systems to finally interact seamlessly. You might be thinking, this sounds cool, but how does it actually work? Let's break down the process of real-world assets tokenization. It's a fascinating blend of finance, cutting-edge technology, and essential legal stuff, all working together. First, there's a real thing, like a building or a bond, that has real value. Next, legal stuff happens. Trusted people or companies keep that real thing safe and set up the rules. Then, a digital token is created on a blockchain. Think of it like a digital copy or a twin of that real thing. After that, the legal rights are linked to this token through special computer programs called smart contracts. This makes owning the token the same as owning the real thing. Finally, there are platforms and experts that help make all this happen smoothly. And that's how real-world assets get tokenized. Now, let's peek behind the curtain and talk about the power behind the scenes: blockchain and smart contracts. At the very heart of real-world assets tokenization is blockchain technology, its secure and transparent backbone. A blockchain is basically an unchangeable distributed record. All ownership records are tamper-proof, and anyone can verify them anytime. This transparency builds immense trust. Then we have smart contracts. These are like self-executing digital agreements with their terms written right into code. Unlike old-school contracts, smart contracts automatically do their job when certain conditions are met, making things incredibly efficient. They can automate verifying ownership, paying out dividends, and transferring ownership. But there's one more unsung hero: blockchain oracles. How does a blockchain know what's happening in the real world? That's where oracles come in. They're the essential bridge that connects blockchains to outside data, like the current price of gold or the verified status of a property, directly to smart contracts. The accuracy of this external data is super important. Reliable oracles like Chainlink and Redstone are crucial for accurately linking the value of a digital token to the real-world asset it represents. So, what's really awesome about real-world assets tokenization? Let me break it down for you. First up, liquidity gets a major boost. That means you can buy and sell these assets anytime, anywhere. No more waiting around or dealing with piles of paperwork. Next, fractional ownership. Instead of needing tons of money to buy something expensive, you can own just a small piece. That opens the door for way more people to invest in stuff that used to be out of reach. Then there's transparency. Because everything's on the blockchain, ownership records are locked in and easy to check by anyone. Plus, global accessibility. Anyone with internet access can jump in, even if they don't have a traditional bank account. That's a big deal for a lot of people worldwide. Also, tokenized assets work smoothly with DeFi. You can use them as collateral to borrow, lend, or create new financial products. And finally, it cuts costs and hassle. Fewer middlemen means faster transactions and lower fees. All in all, this levels the playing field, letting regular folks get a piece of the investment pie that used to be only for the super rich. Now, while real-world assets tokenization is super promising, we've got to be real. There are some challenges to tackle. First off, proving that these tokens actually represent real stuff. That legal link between the token and the physical asset is a big deal. Then, the legal and regulatory side is kinda messy. Different countries have different rules about what counts as a security, so things like KYC and AML get complicated. On the tech side, smart contracts aren't perfect. They can have bugs or security risks that need fixing. And valuing these assets, that's tricky too, especially when the assets aren't easy to sell or price. But here's the good news. Governments and regulators around the world are working hard to clear up these issues. Having clear rules is absolutely key for big institutions to jump in and trust this whole system. So yeah, there's work to do, but the future looks promising. So what's the future of real-world assets tokenization? Honestly, it looks huge. Experts say the market is going to grow really fast in the next few years. Real estate and big money management will lead the way. Governments are also making clear rules, which helps everyone feel safer and more ready to join in. Plus, new tech is making it easier for these tokens to move between different blockchains, which means more people can trade them smoothly. And by breaking expensive assets into tiny pieces, more everyday people can invest without needing a ton of money. Also, big finance companies are starting to use tokenized assets too, which means this is becoming a real trusted part of the financial world. Now, I want to hear from you. After watching this, what real-world asset would you tokenize? Let us know in the comments below. If you found this video helpful, please give it a thumbs up and subscribe for more content like this.